As questions mount about the resilience of the U.S. economy in an increasingly interconnected world, concerns are growing over potential vulnerabilities in Washington's financial system. From the influence of major foreign investors to the resilience on the dollar as a global safe haven, experts are weighing the practical implications of global markets reacting to American fiscal and monetary policies. We're now joined by Brendan Caldwell, director of Caldwell Securities Limited, to unpack how shifts in international investment could ripple through U.S. markets, affect borrowing costs, and challenge the long-held perception of economic stability. Brendan, thank you so much for the time.
Thank you. It'll be interesting conversation. I think everything everybody thought to be true, if it ever were true, is probably not true today. But let's dive into it.
Well, when we ask, could Europe shake the U.S. economy, Washington has a weakness. What exactly is that weakness? Is it fiscal dependence on foreign buyers, political gridlock, or overconfidence in the dollar's safe haven status?
Yeah, among them. And as your earlier segment just said, a president who's prone to saying just about anything, no matter who it offends. Not that it, like, obviously he's wrong. I mean, the comment was about U.S. allies not doing very much in Afghanistan, and the 450 plus British soldiers that died in Afghanistan, the 150 plus Canadian soldiers that died in Afghanistan, bear testament to the sheer nonsense of what he's saying. But that's Trump. He says nonsense. So the U.S. has a lot of weaknesses, not least of which they have someone in charge who says stuff. But what the U.S. does have is they have someone in charge. Europe, by contrast, has never been united. The EU was created to be a united front to rival in size and economic power the United States. And because it has never really, and also militarily, and his point, he was overstating the case, Donald Trump was, but Europe has relied heavily on the United States to defend it over the last 60 or 80 years. That's a fair point. So economically, organizationally, militarily, I think Europe does have weaknesses that it needs to either come together or risk splintering altogether in the face of challenges which are now even larger than the United States, as, say, China is coming of age as a world economic power, potentially rivaling that of the U.S. I have my doubts there, but there are more players on the scene now. And for Europe to survive, they cannot be nations of 60, 50, 40, 100 million people. There needs to be a united front of several hundred million to meet the challenges.
And we're hearing warnings that global investors could weaponize American stocks and bonds. In practical terms, what would coordinated selling big foreign holders actually look like on U.S. markets in a bad week?
It's an interesting thing. Taking a very Canadian perspective on it, we have shown in a little area that we can make a difference to if we decide that we're just so put off by what's going on south of the border. We stopped buying their alcohol. We stopped buying Napa Valley wines. We stopped buying Kentucky bourbon. And it's a bit of a testament to our livers that as a country, we can, by our stopping drinking, at least wines from a particular place or booze from a particular place, that it can have a material economic impact on those regions. So comparing small things to great, and returning to my earlier point, Canada has got a very unified perspective on how we feel about being called the 51st state. To the extent that these little digs and economic slights and indeed straight up economic attacks, if not military attacks, do unite the world, it is possible to have a material economic impact on the United States. Now, whether the world can be united is another matter. America fought a long and bloody war to make sure that it always stayed in one piece. And Canada, still 100 and, what is it now, 50 plus years later, haven't really come to terms with our being a coherent economic or political union. So it remains to be seen. I do think, though, even if they did sell U.S. treasuries, even if they did sell U.S. stocks, one of the things America would like to have is a weaker U.S. dollar. They berate other countries for artificially weakening their currencies, and yet it's been, at least over the last year, a bit of a race to the bottom with the US dollar, and that's not been unintentional.
And Brendan, how real is the risk that Canada, Europe, China, and others slowly diversify away from buying American?
Well, a keychain example is Canada. We decided, in the face of being called the 51st state, to stop buying American alcohol, and that's had a material impact on Napa Valley and Kentucky bourbon production, Napa Valley wine production and Kentucky bourbon. And you wouldn't think that if a whole country decides to not buy American wine, and it would be a big deal, but it has been. The question is whether the whole world can unite to create the outcome that they're looking for. And the question is, what is that outcome? Are they hoping for a weaker US dollar by selling US treasuries? Well, if they are, that's something that the president is looking for as well, because while they talk about a strong greenback, a strong US dollar, they actually want it weaker to stimulate US exports, because that's really what this is about, both collecting money from tariffs for the federal government, but also stimulating the US economy through production of goods and services. So we shall see.